In this session, let's take up this small question on bank reconciliation statement. In my last session, I showed you how to start with the cash book balance and to arrive at the passbook balance. So this is a question which is based on that. I'll read out the question. The cash book shows a balance of rupees 12,500. On comparing the cash book with the passbook, the following discrepancies were noted. Checks issued but not yet presented for payment. Checks deposited in the bank but not yet collected. Bank paid insurance premium. Bank charges directly deposited by a customer, and interest on investment collected by the bank. Now, from all this information, we have to arrive at the balance as per the passbook, right? So, if you remember last class, I told you the items of difference which have led to a decreased cash book balance should be added, and the items of difference which have led to an increased cash book balance should be deducted, right? Now let's make this bank reconciliation statement as on. Here there is no date given, so I'm just leaving it like that. The particulars column, the amount details column, and finally the amounts column. Particulars, okay, now let's do this. First of all, you will write balance as per cash book. That's what is given. The balance as per cash book is given as 12,500. So this is what I'll write here, 12,500. Now let's look at each and every item and decide whether it is to be added or to be subtracted, right? So here I'll make add and less both so that we can keep writing in the correct places. Now here you see the first one, checks issued but not presented for payment. Checks issued but not presented for payment. That means when the check is issued, the cash book balance decreases because we note that down in the cash book, but it is not presented for payment. So the bank balance is more, the cash book balance is less, right? So decreased cash book balance means we have to add this amount, right? So here in add you will write checks issued but not presented for payment, right? What is the amount? The amount is 6,000, which I put in the details column. Now the next one, checks deposited in the bank but not yet collected. When the checks are deposited in the bank, we immediately put that in our cash book, so the cash book balance increases. Whereas the bank will credit that money only when it collects it, right? So here the cash book has an increased balance because we have received the checks and we have deposited it, right? So here the cash book has a increased balance. So that will be deducted, right? So here you will write checks deposited but not collected. The amount is 9,000 rupees. So that 9,000 I'll put here. Fine. Okay, now let's come to this. Bank pays insurance premium. When the bank pays insurance premium directly, the bank balance reduces, right? Whereas in the cash book, we do not know when the bank has paid it. So the cash book balance at that point of time will be more than the bank balance. So cash book balance is increased. That means it should be deducted, right? So it should come in the less items, right? So here let's write this. Insurance premium paid by bank, the amount is 5,000, right? Bank charges. The bank deducts the bank charges. So when the bank deducts the bank charges, the bank balance comes down. Whereas the cash balance is more because the customer will know how much the bank has charged only when he receives a communication from the bank or he gets a copy of his passbook. So this will result in an increased cash book balance. So increased cash book balance means I have to deduct it, right? So bank charges will come here 300 rupees, right? Directly deposited by a customer 8,000 rupees. When someone directly deposits the money into the bank balance increases. The cash balance is less as compared to the bank balance because in the cash book we will make that entry only when we come to know that he has deposited directly in the bank, right? So when the customer directly deposits money in the bank balance immediately increases, whereas the cash book balance at that point of time is less. So decreased cash book balance means it has to be added, right? So here I write directly deposited by or directly deposited into bank. The amount is 8,000 rupees. So that will come here in the add. Now you see this interest on investment collected by the bank. So when the bank collects interest on investment, again it is collecting it directly, right? So the bank balance increases and the cash book balance will be less till the time the customer comes to know that the bank has collected the interest on investment. So at this point of time, the bank balance is more and the cash book balance is less, right? So again, decreased cash book balance means it has to be added, right? So I'll write here interest on investment collected by bank, right? So that amount is 2,000 rupees. So let's write that 2,000 here. That's it. So three items we have put in the add and three items here, total 6 items, right? Now you see, first of all, you add this whatever you have here. So that is 6 plus 8, 14 plus 2 is 16,000, right? That 16,000 will be added first of all. So this 16,000 will be put here in this column, fine, and I add this, right? So that is 28,500, 12,500 plus 16,000 is 28,500. Now total the items to be deducted, this is 14,300, right? 14,300. So from this 28,500 you deduct this 14,300. So that basically gives you the answer here, which is the balance as per the passbook. This comes to 14,200, right? So this one, this is your balance as per passbook, right? So this is the answer. This is how you will do this question, right? Now, the same bank reconciliation statement, if I want to follow the other format, like the plus items, minus items format, in that case, particulars column will be there, plus items, minus items will be there. In plus items, you will have all this 12,500, 6,000, 8,000, 2,000, everything will come. And in the minus items, you will have these items 9,000, 5,000, and 300, right? And then finally, you can balance it, right? So both ways, whatever format you want to follow, you can follow that. The answer has to be the same. So what you have to keep in mind in these questions, where you have to come from the cash book balance to the passbook balance, is that an increased cash book balance should be deducted from the cash book balance. That is, whatever items that has led to an increase in the cash book balance should be deducted, and whatever items that has led to the decrease in the cash book balance should be added, right? So with that, I come to the end of this session. In our next session, we'll take up another case on bank reconciliation statement.